What's going on, everyone? So we're going to take a look at Amazon here. Amazon was down 180 points on Friday. If you haven't been living under a rock, you know that we've been pretty much selling off everything. Okay, the SPY, the triple Qs, the small caps have been selling off forever, and now it's everyone's starting to pay attention to the overall market. When you have the big dogs of the world, your Apples, your Amazons, your Teslas, your Nvidias, your Microsofts, when these things are taking 10, 15, 20% haircuts, that's when the eyebrows start to raise. Now, if you've been trading small cap stocks, like anything that was running in mid to late 2020, early 2021, you guys have kind of been feeling the pain for an extended period of time, but it's kind of like, that was put on the back burner. So what I'm trying to say is that you guys have been experiencing a lot of pain in these small cap stocks for what feels like months and months and months on end, but the overall market was pretty healthy. The overall market was going up. You had stocks putting in all-time highs, Tesla at 1250, Nvidia at 350, Facebook, Microsoft, so forth and so forth. But now you're starting to see it trickle down. Now you're starting to see the big boys start to get hit. And now you're going to start to see, the social media headlines and the media outlets and CNBC and CNN and Fox, business all start to talk about the stock market going into this correction, because now that the big institutional big boys, their stocks that they like to trade are now getting hit. So with that being said, we're in a correction, okay? We're down about 12% on the NASDAQ 100, and a lot of stocks within the NASDAQ 100 are down even more than that. Like right now, Amazon's down about 20%, 25% from all-time highs, 37.73, currently trading at 28.52. We were down 6% just on Friday alone. So what I have here pulled up is the weekly time frame. Now, if you're looking to day trade, you're looking to scalp, I'm not going to tell you to go out there and scalp Amazon. There's going to be other stocks that are going to be a little bit better looking to scalp to the downside in this correction market over Amazon. Now, am I saying that Amazon is not a good short? Of course not, because what we need on Amazon is we do need a bounce. We need a bounce back up into 3,000, maybe 3,100. We need that good solid bounce, and then we need that rejection. Okay, we're going to need that rejection, and then we're going to need to flush back through these lows at around 28.36. Measured potential to the downside is going to be 26.75 and 25.37. Those are going to be the two next soft landing spots on Amazon. So if you're looking to take Amazon to the downside, what you want to see first is a bounce. Don't get happy feet here and happy trigger, mouse and try to just, when the market opens on Monday, take this short. Amazon can rip 100 points, completely take your face off. You can go into a big drawdown, get scared, and then lo and behold, 1-2 weeks from now, Amazon's trading at 2,500. So what you want to do is stay patient. You want to see this bounce first. You want to possibly see get rejected at 3,000. You want to see a rejection at 3,100, and then you want to see some sideways consolidation, and then you want to see it start to roll over back to the downside. When you get that move, you can definitely use the 100, you can use the 100 simple moving average as your kind of guide. As long as we're trading underneath the 100 simple moving average, I'm going to continue to hold a short position. If we do close back above it, well, I know we got more room back up here to 32, so I'm going to exit that trade, kind of manage my risk accordingly. Now, if you're looking to play the bounce on Amazon, because you will get one, this is an extreme move to the downside, an extreme candle to the downside here. So what you're looking for is any kind of washout in the morning this week. What you're looking for is either a flat open, you're looking for a red open, you're looking for a small gap down, then you're looking to find a little bit of support, and then you're looking to have this start to move up. As soon as it starts to move up, you can use those lows as your absolute stop, and then you're going to use a profit target of around 3,000. That's going to be your first profit target. You're going to want to take money on the way up into 3,000. This market is not holding moves, meaning that any bounces, they're getting faded. And even just shorting, you're shorting, the stock is moving lower, but it's catching a bid and then rallying back intraday. So it's a very, very tough market to trade. Now, can you make money going long? Can you make money going short? Even in a downward market, of course, there's going to be opportunities there. However, it's not going to be one of those times where you just want to put on a short position, and come back tomorrow. It's not a time where, hey, the market's bouncing today, put on a long position, come back in 2 days. You're going to really need to manage these positions. You're going to need to be, the amount of time that you're going to be into the trade is going to be a lot shorter. Maybe you're going to be taking profits a lot sooner. So on the bigger scale of things, I wouldn't start loading the boat on Amazon at all. Amazon has just broken down and lost, almost just about a year's worth of consolidation. Okay. So we've had highs of 37.73. And we've had lows in 2021 of around 28.75, and currently we're at 28.52. So we've lost this whole range that Amazon was in 2021. That's not a good thing. Personally, what I'm looking for is some sort of bounce. I'm looking for the rejection, and I will be looking to take this short through the lows, 28.40, 28.30 in that area. Now, keep in mind, we do have earnings that are coming up we're having earnings that are coming up in February. So, in just about a week and a half time here on the 3rd, we're going to get those Amazon earnings. And with that being said, if they do start to sell off a lot of these tech stocks, a lot of these mega caps, if you paid attention, you've seen what they did to Netflix. If they start doing that to Apple and Nvidia and Microsoft and Amazon, look out. We could be in a little bit of a bear market for another 2 to 3 months. So meaning that any sort of bounces will get faded, and we have to kind of look on the weekly time frame, these bigger levels, these bigger macro soft landing pads as to where potentially the stock can stop. Now, I think that we'll probably get a bounce. We do have FOMC meeting on Wednesday, so we have to see what Jay Powell is going to be talking about. And then we do have earnings kicking off on the mega caps. So with that being said, just kind of monitor those things accordingly. Just understand where your support is down here, 2667. Just understand where your potential rejection could be right around this 3000. As long as you know the range that you're playing in, you can play accordingly, whether that be to the downside or to the long side. I hope that kind of helps. Guys, if you want more information, you kind of want to know what stocks that I'm trading, you want my watch list, you want my signals, I do one-on-ones, as well as I put out a watch list every single day. You can come to my Discord. That Discord link is down in the description box below. Also, you can subscribe to my channel as I do these technical analysis videos on the daily, multiple times a day on a numerous array of stocks. You can comment down below. Let me know a ticker symbol that you're interested in. Maybe a stock that you're trading. Maybe it's a stock that you're holding. I'll definitely pull up the chart, pull up some macro levels, see where there's an area of opportunity where we can make some money, whether that be long or short. Now, I understand all of you perma bulls who are long-term investors, who you guys don't think that these stocks can go any lower. Guys, they can go lower. That doesn't mean that you're just going to sit here and watch your portfolio bleed out. There's things that you can do to counteract with what's going on. Any big day where we have a big bounce, what you do is take some cues, take some spies, go short. Hedge your long positions by going short. Maybe taking some put options 2 to 3 weeks out, a little bit out of the money, so that way, just in case the market has this little bit of bounce, and then you think everything is fine and dandy, and the market rolls over, and we continue to keep selling off, you're hedged short. That's how you combat and navigate through this type of market and environment. You do not just sit here and watch your portfolio continue to bleed out, looking to the next person, looking to this person on social media, looking to StockTwits, looking to Twitter, looking to YouTube, looking to CNBC to try to figure out what to do. Be an adult, be proactive, hedge your long positions with some Qs or some SPYs short, and you just keep rotating those positions out. So you're obviously not going to sell here because the market will come back. Over the last 100 years of the stock market's existence, going back to the Great Depression, the stock market has continued to go up. This is just a little bit of a downtrend here. I wouldn't, yes, you might feel a little bit of pain. Maybe this lasts another month, maybe this lasts another year. But if it does last longer than a few months, you're going to need to hedge your position with some shorts, okay? So that way you're not just getting beat up every single day. That's the best advice that I can give you. Guys, I'm going to do a lot more videos. There's a lot of pain in the market. There's a lot of blood in the streets. I know a lot of people are anxious and nervous. A lot of you guys don't know what to do. Right now is definitely a time you're going to want to have dry powder. You're going to want to be able to take advantage of the volatility long and short, meaning that right now is not the time where we're going to start loading the boat, putting on long-term positions. Right now, we're going to play the price action, whether that price action be bullish or whether that price action be bearish on the day. And we're going to take our trades accordingly. And if we do have a long-term portfolio, we're going to hedge that with some shorts. So until next time, guys, I will see you guys all in the next video, and everybody stay calm. Things are going to be okay.